Canada's housing supply continues to plummet.
Hey everyone, thanks for joining us again. Welcome back to the Vancouver Life Real Estate YouTube channel and podcast. We're seeing the market move incredibly fast still. It seems every week we have so much valuable information to share with you. And a quick ask here out of the gate is, do you know about the YouTube bell? If you're a subscriber, first, thank you so much. But second, if you hit that little bell, it's actually going to send you all notifications about our channel so that you get access to our stuff and get notified about it first. So you can stay on top of the market and we can get you all the timely information as quick as possible. So let's dive right into it because lots to go over today. Like Ryan just mentioned, the Canadian housing supply is literally plummeting. So much so that I'm sure if you've been out there house hunting even lately, you know how tight it's been, especially this year. But even over the last few years, it has been incredibly tight with inventory. So much so that since 2015, in just 6 short years, the amount of homes available for sale is less than half.
Doesn't sound like very good planning to me.
And let's be honest here too. Housing is less than half, but the population has obviously been growing.
Yeah, and I think we've had some other podcasts that we've talked about where we've seen and we've kind of talked about how sort of the demand side of the housing market is really we think by design to some degree, right? And so when you start to look at, holy cow, where has our supply gone and dropped in the last 6 years? Well, if you go back to the 1970s and you go all the way to sort of the mid 2010s, Canada's population per decade grew by about 3.1 million. But we were building 1.3 million single family homes per every 3.1 million increase in population. So it's like by design, we were never building enough homes to continue the demand and price appreciation of these assets, right? And even in the 2010s, if you will, population even surged to 4 million, but new homes actually fell to 1.1 million, even further increasing that disparity, right? So it's kind of a new story. I think it's exacerbated right now because of the hot marketplace, but this has been going on kind of all the time, which is very interesting.
Yeah. And of course, as you can imagine, very simple economics of supply and demand. When there's more demand than supply, prices are going to increase. And we've obviously been talking about this ever since, since it started happening about 18 months ago, but especially during the pandemic, it has, as Ryan mentioned, exacerbated. And Vancouver, because we talk about it so much, has that average of about 14% increase in your average home price year over year. But let's take more of a macro look and see what's happening nationally here too. Because while everyone's thinking Vancouver is just so blown out and things are happening so quick at that 14%, Vancouver's actually fourth in line when it comes to price appreciation amounts. Ryan, why don't you start off with the biggest one of the year?
Yeah, and this might not come as a surprise. I think a lot of people in Canada might know this, but Ottawa is the leader, and Ottawa has absolutely smashed this last year, growing 35% in 1 year. I mean, that is. We saw those kind of numbers back in 2014, 15 here, I think, is when we saw that. 16 is when we started to see sort of 30% year over year growth, but didn't last long. I think it was 2-3 years, and then everything went up by 100%. But that being said, you look at Montreal, it's close behind that at 29%, and Toronto at 18%. And then you got Vancouver here sitting at 14%. And we're about 11% behind the actual national average in terms of price growth, right? Canada's overall price growth is at 25%. So Vancouver is I think the problem with Vancouver is the price of entry is already so high. So that
Yeah.
14% growth is so unaffordable for a lot of people comparatively to say Ottawa. But even Toronto and Montreal, those markets are expensive markets now. So to see those, at 29 and 18% respectively, and then Canada overall at 25%, it's some staggering growth numbers,
Yeah,
right? And
Montreal, Ottawa, they didn't see that 2016 run up as much as the West Coast did here, but clearly they're seeing it this year. And it's
mm,
kind of this great leveling, like you said, right? We're kind of seeing the East Coast prices starting to inch up to hit West Coast numbers as well. And, with that 25%, it's bringing your average Canadian home up in value by about $140,000 since this point last year. And keep in mind, this is essentially, if you're selling and it's your primary residence, this is tax-free money, right? 140 grand. So you've got two things happening. I mean, obviously, on the one side, you've got everyone who is a homeowner is in essence happy and feeling wealthy and seeing these price appreciation numbers kind of build their confidence in,
mhm.
in their consumer confidence, which we're seeing in the CPI, of course. But it's also on the other side, you're seeing people that are just seeing this happen right in front of them and hearing these stories every day. And they're like, it's no wonder they're going to do anything they can to kind of jump on that train and become part of this seemingly endless movement of upward pricing.
Well, I mean, even if you're late to it and you end up buying $1 million place, and in the last part of the year it goes up by 3%. Well, 3% of $1 million is 30 grand, right? And as far as I'm concerned, for a lot of people, especially people who have an income that is predictable, how else are they going to make an additional $30,000, $40,000, tax free, right? And it's by owning a home. So it's no wonder that so many people are trying to buy homes right now. And I think a lot of these lessons were learned by the generation sort of in front of ours, and they've been passing on these gains to their children and saying, we're going to take some of our gains and help you continue on that path, because it's one of the best ways to create wealth and equity in Canada is by owning your personal home. So it doesn't surprise me at all, and I don't think it's going anywhere. I mean, even when you look in the States, the average price of a home in the States is about pre-pandemic levels was $280,000. It's now 360,000, right? So even in the States, we're seeing, close to $100,000 gain year over year, right? So, and you got to wonder. I mean, they're running at a 5% inflation rate down there too. So, it's no wonder people are feeling rich and they're wanting to spend if they're homeowners, right? Or if they've
Mm-hmm.
recently bought.
Yeah, that's it. And of course, locally here, starting off on that high number, I mean, what's going to happen now with that 14% increase locally? I mean, we must be seeing, numbers that are all-time highs locally, and you might have some questions about what your property is worth.
Yeah, and I think that's a really good point. I mean, if you live in the Vancouver core, or in the GVRD generally speaking, and you're wondering what that 14% means to you and your home, you definitely got to reach out to us and ask, and it won't take us long to let you know kind of where it's at, what it's worth, and how to maximize that value. So please do reach out.
So with these type of price appreciations that we're seeing, it's no wonder really that homeowners have hit a record high in equity positions in their home. That number, it's the highest in 30 years. It's up. It's up, gosh, about 5% from the 90s, and has just hit 76.5%.
Wow.
Right. So over 3/4 of people's home is equity, meaning there's about 23.5% is in mortgage debt and 76.5% is in equity.
That's incredible. And that speaks to uh, good financial practices. If you ask me, it doesn't sound very risky at that kind of levels, right?
Yeah, and especially enticing when you've got interest rates this low, and especially when you're paying down such a high level, about 2/3 of your principal pay down right now with the current interest
Yeah.
rates on mortgages. Right, every payment 2/3 is going towards that equity position.
And not like in the 80s when you were, after 5 years, you had paid down about 3.8% of your home.
Yeah. So
It's quite
again,
the
looking at
opposite.
it from a bit more of a macro level, we know that homes out here average about 1.1, $1.2 million now. Canada, your average is about 677,000. But that still means the average Canadian homeowner has over $500,000 in equity in their primary residence. And I think
So,
maybe another way of looking at this too, because a lot of people think, oh, the real estate market is fragile, and a couple basis points in interest rate increase is just going to collapse the whole thing. You could literally see prices across Canada for homes drop 75%, which I don't think will ever happen. And yet the average Canadian would still be above water. They would still have more equity in their house and not have to sell with debt.
Another thing that we've touched on it before in previous episodes, and it was, it's something around 50% of Canadians have a mortgage on their home. There's also another 50% that don't, right? So if interest rates all of a sudden became very expensive, it's still, you've got half the marketplace that would be relatively unaffected in terms of their major asset, right? So it's easy to look at a situation like this and think, well, it's getting overheated, it's going to pop, it's going to burst, it's going to correct. Well, when you start really pulling apart these numbers here, I don't see it. I just don't see it.
Yeah, there's going to be outliers. Sure, there's some people that maybe bought at the absolute height and they're totally stretched on their mortgage. They can afford it today, but maybe they can't afford it in 5 years if interest rates do hit a much higher number.
That's right.
And you have to definitely recognize those are the outliers.
Mm-hmm.
And those are the ones that, yes, the media will focus on, and you're going to hear some horror stories because they will exist. Yeah. But look at the data, look deeper. The foundation of Canadian real estate is so incredibly stable when you look at it from this sort of vantage point, and you recognize how many people don't have to sell if the market even drops 50% because they still have more equity in their home than debt. Then you realize that, okay, there's no reason to panic, and these people won't panic. And again, we are talking about the vast majority, right? Over 75% of Canadians are homeowners.
That's
and
right.
And 76%, and of those, 50% are mortgage free. And of the balance, the combined average, 76% is equity. So it's it allows you to, I guess, look and understand why people are feeling confident in Canadian housing even more so, right? And again, it's been over 70% equity for, since the 90s, for over 30 years here. It's continuing to be a stable asset class.
I think it also, as if I was a foreign investor, or maybe I had recently got my visa to come and live and work in Canada and buy a home, to me, this speaks to incredible stability to put the vast majority of your cash, right? And so it's no wonder to me that it's so desirable from around the world in terms of real estate. It's protected, it's well thought out, and the vast majority of the people buying, the vast majority of Canadians, look after it and treat it very seriously, right? And that speaks to the numbers that we're talking about.
Mm-hmm. So let's move to the next topic here, Ryan, where we've talked about in the history of the pandemic here, and for the first time in any recession, that household savings has been increasing, and by a lot. Just last month alone, the savings deposits rose another 1.4% and is now at a record $120 billion more than pre-pandemic. This is 21% higher, 20% more savings than just a year ago.
Oh my God. And you wonder why, well, you don't have to wonder why, the housing market's on fire. People are trying to take these savings and reinvest it, make the most of it, right?
Sure. Well, and of course, we still have government stimulus in place. And for the most part, we still don't have a lot of people having places to spend their money. So they're just saving.
Yeah. And I mean, so in terms of dollars, that 120 billion, right? It basically means that it's an extra $3,800 for every single Canadian over the age of 15 years old, right? That's quite a bit of cash.
Yeah.
Right. You also look at your debt to income ratio, and it's at a 6-year low, right? still at 165% compared to the US at 85%, right?
Yeah,
So
that's an interesting number, and maybe we dig a little deeper into that one,
yeah.
because great that the debt to income ratio is dropping, but Canada still by far the highest in the G7. I mean, we're double the debt
Yeah.
income ratio to our neighbors to the south. So
Is this a point where we talk about good debt versus bad debt?
well, that's also it, right? Because while we're
Right.
talking about that, and the number is extreme, you can't really dampen that number. It's not the whole story, and you also have to look at almost record low default rates too. So yes, we're kind of operating at a really high level, but we're operating without stress, although it is a stressable kind of number. But it's interesting because it's like you've got this high debt, but then you've got record high savings too. So I think, like Ryan, you just touched on, I think there's a lot of good debt happening in there. And of course, understandably, when you've got basically the banks and the government saying, yeah, buy houses, we're going to protect them and keep rates low. So people are getting wealthy off of that debt.
Yeah, totally. I mean, your household debt to asset ratio is at 15%. That's the lowest in 20 years.
Yeah.
Right.
And that really, really talks to that debt to income ratio, because you can't look at one without the other.
Yeah.
If our household debt is the lowest in 20 years, again, that's just going to add to confidence about your debt to income ratios.
Yeah. That means it's easy to come up with a lot of cash, right?
Yeah.
If it's needed.
That's it.
And understandably, your consumer confidence is going to be quite high, right? In fact, I think it's at an all-time high.
That's very likely. Yeah. I mean, how could it not be right now when people have more money than they've ever had?
Well, I mean, if we just take a second here, just to touch on an anecdotal story. On Tuesday of this week, we were in a multiple offer situation. And, over the last couple of months, we felt a little bit of tapering from the marketplace. It hasn't been quite as nuts as it was in March. But asset classes like townhomes are still going nuts. And we were involved in one. The townhome was listed at $899,000. It received 6 offers, 3 subject-free offers, and sold for $1,046,000. And that just goes to show, the level of activity, the level of confidence that people are prepared to go and buy assets for right now. And it also speaks to the pre-approval limits and that kind of thing, right? So still a very healthy marketplace for sellers, without a doubt.
Right. There you go. We've touched on it before. It's still happening. The wealth inequality, when you look back at these numbers we've just discussed, with your average home going up $140,000 a year nationally, it's no wonder that you hear the stories like homeowners see a net worth increase of another $73,000 just in Q1 of 2021.
Holy cow.
And again, that's 73% of Canadians, right? So, or 75% of Canadians-ish. And then you look at the other side, the renters only saw their net worth increase by about $8,000.
So roughly 10%. Yeah, just over 10%, right?
Right. So yeah, exactly.
So I mean, if there's anything you take away from this, it should be you should be trying to buy a home if you can. It will remain, in my eyes, the best investment that a Canadian can make. And, you should be doing everything you can to save, beg, borrow, steal to get into that marketplace. It's the best thing for your financial future, right?
So, yeah, with all these people feeling so wealthy, it does feel, and of course, with borders about to reopen, it sounds like, with the province open now, with restrictions really easing, I think the spending spree is just about to begin. For real. I mean, we've seen a spending spree on homes, of course, but I think the other attributes to life are about to be purchased, like travel, of course.
Yeah, restaurants are probably going to, I hope they have a great summer, right? They deserve it, same with destinations, and, we'll like to see airlines get back up and being profitable again, right? But if you look at that being said, I think there was something like 7.8 billion in permits that have been released for building too. So there's a lot of new product that's going to be coming to feed some of this demand, right? But again, it's going to take time to hit the marketplace. So
Yeah, it is. Housing starts are high, which again, you kind of have to look at that coming off of the low base effects of last year when everybody when the developers pulled back because of the pandemic. That was released. Demand here, of course, is going to be released. But because of, like we said, because the available units are literally half of what they were just 6 years ago. I mean, you look at the pre-sale market, for example, and again, we're talking nationally, unsold inventory is below 10,000 units. Now, what does that mean? Because we don't have perspective. Well, if you look at the 10-year average, it's closer to 16,000 units.
Holy cow.
Right. So even pre-sold inventory nationally is 40% below the average. So things, you've got people feeling wealthy. A lot of them are looking to, let's say, the pre-sale market, for example, to invest some of those funds.
Well, I think that kind of wraps it up, I think, for this week's episode anyhow.
It does. Thank you so much, as always, for watching and listening. And if you're feeling like you're getting some value out of this, we would love to see you guys subscribe. Buttons down there at the bottom. We do this every single week, and we look forward to bringing you more timely information on this fast-moving Vancouver, and of course, now a little bit of a macro Canadian market look.
Cool. See you guys next week.